Bitcoin has finished its weekend moves rather uneventfully. Quite interestingly, not much price action has occurred over the last couple of days, but that does put us at a really interesting spot for what I think is about to happen for BTC. In today's video, we are taking a look at a technical analysis. I'm going to be sharing my thoughts and opinions on what I think is about to happen here for BTC. Let's roll the intro and get right down into it. Hi guys, welcome back to another update, and today we are talking about Bitcoin and the potential for a bit of a surge to the upside. So here we have Bitcoin paired up with USDT. We're on the 4-hour Binance chart. We are of course still in our ascending wedge. This is bearish. Obviously, this is something that will play out over a longer period of time. And where we are right now is a really interesting spot for BTC. So over the weekend, we were discussing the sideways ranging market that Bitcoin found itself in. Okay, so what we have here is two ranges. We have the low range between 49.917 and 50,744. And then we have the 52,364 to 52,985 on the higher range. And basically what's happened here is every time Bitcoin's come to the top range, it's come down to the bottom range, comes back to the top range, comes back down to the bottom range. And so our next expectation here is going to be trying to get that breakout back up to that top range, and if we can get a closed position above. If we can get a closed position above here, then that's actually going to put us in a really strong position for targeting out those higher ranges. And as you can see, if I just remove all these circles, we find ourselves really trying to get some support on that 50 EMA, currently at $51,271. If we can turn this into support here, we have a good strong chance at a rally, okay? And that rally could be a breakout situation for BTC. Okay, so those are the things that we're going to be keeping an eye on. Now, our momentum is shifting back to the downside, at least on our 4-hour time frame. But our 1-hour time frame is ready to kind of see a bit of a surge to the upside, in my opinion. So on the 1 hour here, you can see we're finding support on the 200 EMA. That 200 EMA is where we're looking to see in the next kind of significant bounce. Now, it might not happen. We might lose this. We might have to come back down to the lower ranges. As per our stochastic RSI on our 4-hour time frame, we may see that we come down to this low range once more before we get the breakout. But ultimately, things here are looking pretty decent for XRP. I'm pretty happy with the positioning. But let's go ahead and see if we can find out if we have any other kind of confirmations of bullish movements or bearish movements. So here we have the divergence indicator. Let me bring this up here. So our yellow line here is the RSI, the relative strength index. And what it's doing is this we have this indicator basically printing bearish or bullish or hidden bearish and hidden bullish flags depending on the price action in relation to the relative strength index, the RSI. This is a divergence when momentum goes one way and price goes the other. Okay, so for example, price goes up into higher highs, but the RSI goes down, that's bearish. And at the same time, when we have lower lows on our RSI, but higher highs on our higher lows on our price action, actually that's hidden bullish divergence, and you expect moves to the upside. So at the moment, we do not see any kind of flags here or any kind of major indications to give us a bit of a swing in either direction from divergence point of view. Okay, so here we can see that the RSI is reacting as it would normally react to the price action as we find resistance on our mid-trend line here, and we find support on our 50 EMA. If we lose the 50 EMA on the 4-hour time frame, my expectation will be a revisit back down into the kind of lower range between 49,917 and 50,744. Okay, let's go ahead and bring the volume profiles in. Now, the volume profiles are interesting to me. Okay, so since we had this move to the upside, okay, all of this move to the upside, volumes were okay. Don't get me wrong, there are some inconsistencies here, right? We have spikes in volumes, and ultimately everything else is actually quite low, right? So that's not the best sign. It's not consistency. It's not showing you great demand coming in. But during this kind of ranging market, volumes have been decreasing, okay? Now we can see that during this, there's a couple of spikes in volumes, but if you isolate those and take them out, you can still see that even this has a decrease in volume, okay, as we were correcting down over here, for example. And likewise, this correction over here was also decreasing volumes. This shows us that there isn't isn't a huge appetite for selling right now, in the same way that there hasn't been a huge appetite for buying either, as this most recent surge to the upside has also been fueled from a decrease in volume. Okay, that shows us that there isn't an appetite for buying and there is no appetite for selling either. This is a stagnant market, a ranging market. And this ranging market, I believe, is getting ready for a breakout to the upside. Okay, so let's go ahead and get rid of the volumes and come back into our chart here. So it's going to be a bit of a challenge. I am expecting us to revisit this low range at some point, but I'm hopeful that we can actually touch on the higher range trend line before we move down and kind of get support found on the low trend line. What I mean by this, guys, is I'm looking for us to break out towards 55,000 as per last week's videos, and that hasn't changed. I still think that is the most probable scenario after this ranging market here. Okay, so we are still looking for testing that higher trend line, and if you're lucky and you're super bullish on the market, maybe we'll get a breakout, right? But ultimately, a test of that 55k. So that's kind of what we're looking for. And then from there, I'm looking for us to come down and test that low trend line, okay, as we kind of coil up into the apex of our ascending wedge. So we're looking for this kind of to continue bouncing around quite a bit as we kind of get into late March. After March, the expectation will be either a breakout or a breakdown. Now, this being bearish pattern at the moment, and if we don't get a breakout beforehand, there's a highly unlikely that we're going to get a breakout right in this kind of apex here. Now, it's possible that bulls do rally up and break out of this structure. That would be fantastic. It would kind of put this whole bearish pattern to bed. However, the bears will be looking at trying to bring this down. Okay, that's the kind of what this whole pattern is about. So we'll be keeping an eye on it. It is, as I said, unfortunately bearish on the macro because that's going to take, another month or so before we kind of play out. And until then, we will be hitting these higher ranges. It's possible that maybe we even tap on 58k, maybe 60. That's a bit of a breakout though, so maybe not. But it'll be interesting to kind of see how high this price can push before we get that inevitable. And where does this break go to? Well, my expectation will be lower than 38,555. Okay, that potentially does put us right the way back down into that low range that I've been talking about previously of 28,888 to 31,848. Now, there's many reasons and rationales behind this, and we have to be quite mindful over the potential. So I'm going to assume that we hit 58k. Coming down to this is about 45% to 31,000, and 30k would be about 48%. Now, a lot of people will say that's crazy. We're not going to lose 40-odd%. I will kind of just highlight on a bigger macro scale, 40%, 45, 50%, they're actually relatively common in Bitcoin's world. And if the stock market does have a major correction, then the Bitcoin ETFs are going to be immense amount of selling pressure that is potentially going to drop the price of BTC quite significantly. And so for those who do not know as to why and the rationale behind $30,000 Bitcoin, it is going to be a Federal Reserve pivot. It's very unlikely, though, that that's going to happen in March. It's probably more June, July. But, if it does happen in March for whatever reason, then ultimately stock markets have a good 50% correction. And with the Bitcoin spot ETF being, on exchanges, and so forth, and these stock exchanges are likely to see such significant selling pressure. Ultimately, I'm expecting a good 45-50% correction for Bitcoin. Now, it might not happen, and that's fine. That's fantastic if it doesn't. I've already got a good position in the market. If it pulls back, I'll just dollar cost average more into the market. But ultimately, I do see that Bitcoin is in a pretty decent position. A good healthy correction of 45 to 50%, I think, is likely to occur, and that will most likely happen when the Federal Reserve pivot, whenever that may be. Now, wherever the price may be at the point of a Federal Reserve pivot may actually prevent $30,000 Bitcoin, but a 40 to 55% correction nonetheless will occur. For example, if Bitcoin rallies up to $100,000 before the Fed pivot, then the Fed pivot, well, then we're only revisiting the numbers that we currently are at today. This is pretty simple math. So just be aware that there's really difficult to kind of time the market. We are kind of just waiting for the Federal Reserve to pivot. Once they pivot or lower their interest rates, then we'll see the stock market correct, we'll see the Bitcoin spot ETFs dump, and we'll see Bitcoin and crypto markets coming down 45 to 50% in my humble opinion. But guys, why don't you check out this video here where I'm discussing a potential breakout situation for XRP. Some interesting developments there, and it might be of interest to any potential traders out there.